Hello and welcome to this bite-sized webinar from Companies House. This is the third and the last of three short webinars to help you understand how to start and run a business. To allow people to join, I'll just talk you through the current series. Now, in the first webinar, we looked at the types of business structure with our colleagues from the Business Support Helpline and whether a limited company or a sole trader may suit your business setup. Then in the second, we covered the requirements for starting a limited company, and then we looked at the annual filing requirements. Now, if you missed any of those two webinars, you can watch them again from our YouTube channel or from our go-to link, which we'll send you in the follow-up email. Now, today, the third of this series, we'll be talking about setting up and running a community interest company, which will be presented by my colleague Marilyn from the KIC Regulator. My name's Gary Townley and I'm part of the communications team here at Companies House. Now, in addition to us, there is a team of KIC experts in the background awaiting your questions. So if you have any questions about starting a community interest company, then this is your opportunity to get first-hand advice from the experts. Now, feel free to send your questions in to us throughout the presentation. Now, we can only answer general questions and can't go into specific details, so make sure your questions are of a general nature. Now, just allowing people to join, if you are new to GoToWebinar, I'll just take you through the look of the screen. Now, on your screen, obviously, you'll see the presentation, and on the right-hand side, usually, you'll see a tool panel. Now, halfway down the tool panel, there is a box that says questions. And to make this bigger, simply click on the icon that looks like an arrow coming out the box. It's on the right-hand side next to the X. That will detach the box and enable you to write your question into a larger sort of box there. Now, if you're watching from a smartphone or a tablet, you can ask a question by using the question mark symbol on the screen. So before we get started, let's get you familiar with the system. So if you can say where you are listening from, which part of the country, and if you've got anyone listening with you. So if you're listening with another person, so +1 or +2 or whatever you're doing, or if you're on your own, just say you're on your own. Now, I'll give you a minute while they come in. Now, also in the panel, we have a couple of handouts. So again, below the question box, there is a handout panel. Now, if you click on that, it gives you links to a couple of useful handouts that will link you to some useful pages on the gov.uk website. So please download them before we end today. But if you're watching the recording and would like the handouts or anything else related to today's webinar, just contact us at webinars@companieshouse.gov.uk. Now, before anyone asks, because you often get this regularly asked, you will be getting a link to the recording of this presentation sent to you once we're finished, and that usually goes automatically out after 24 hours after we finish, okay? And then also this presentation will appear on our YouTube channel, again, in about 24 hours time, if not sooner. So in today's webinar, we're going to be looking at what you need to know if you're thinking of starting a community interest company. We'll begin having a couple of polls as we go through today's presentation. So if you want to join in there, then please do so. So without further ado, I'm going to hand you over to Marilyn from the KIC Regulator, who's going to take you through today's presentation. So good morning, Marilyn. Hi, Marilyn. I think you're on mute.
Sorry about that, Gary. Yeah, thank you. I was listening to you. I'm sorry. So good morning, everyone. My name is Marilyn, and I'm a case manager within the Office of the Regulator of Community Interest Companies. In this webinar, my aim is to give you some background of the Community Interest Company model, KICS for short, and what you should consider if you are thinking about starting such an enterprise. A brief outline is that I will provide further information on what the benefits of the KIC model are, what the regulator looks at when considering an application, do you provide community benefit, the application process. Customers can sometimes get confused between the different entities that fall within the community benefit third sector model and so I will just mention a few of these before moving on to the rest of the content. The community benefit third sector model can include a charity, community interest company, a charitable incorporated organisation, which is a CIO, a cooperative, or a community benefit society. The community benefit society and cooperative models fall within the remit of the Financial Conduct Authority. Cooperatives are formed primarily to benefit their own members who will participate in the business of the society. However, we do have cooperative KICs. This structure is chosen on the basis that it has a statutory asset lock, directors can be paid, etc., but they wish to identify with the principles and values of the cooperative. Both the charity and the CIO fall under the regulation of the Charity Commission, and you would need to contact them directly for any further information. The agenda, what I will cover today is what is a community interest company, the benefits of the KIC model, the differences between a KIC and a charity or ordinary company, a quick explanation of the registration process, and provide you with our contact details.
Okay, thanks, Marilyn. We'll first have our first polling question of today. So let me just launch that for you. There we are. Now, if you haven't taken part in polling questions on a previous webinar, just to explain, we won't be able to say your individual votes, but once the poll is closed, we'll be able to see the overall picture as a percentage score, and obviously we'll share those with you at the end. So I encourage you just to take part. It's just a bit of a bit of interest really to see where you are in your role in thinking of starting a KIC. So the first question we got there is: have you looked at the Office of the Regulator of Community Interest Companies website before taking part in this webinar? And the simple answer is yes or no. And I can see those coming in now. Yeah, we've got quite a few people coming in. I think, yep, that's it. So let me close that poll now and share the results with you. There we are. So quite a few of you have not actually looked at the website before listening to today's webinar. So thank you for taking part in that poll. I'll now hand you back to Marilyn to continue the presentation.
Right, so what we will cover now is what is a community interest company. So the KIC model has been in operation since 2005, with the office opening in July of that year. The business community had recognised the need for a legal form of social enterprise as an alternative to a charity or an ordinary company, and to particularly benefit the community rather than shareholders or members. So what is a KIC? First and foremost, it's an ordinary limited company that has to comply with company law as well as KIC legislation. It may be limited by guarantee or limited by shares. It can be a private limited company or a public limited company. A KIC is able to trade, secure contracts, pay salaries and hire and fire like an ordinary company. What separates them from an ordinary company is that they operate for a social purpose and are happy to be regulated to ensure that they deliver that social purpose. This is a level of regulation is an added assurance for customers, financiers, and the general public alike. Although KICs are labelled not for profit, this really means not for private profit. First and foremost, KICs are businesses which have to make a profit to survive. It is what they do with that profit that makes the difference between a KIC and an ordinary company. So take time to consider which of these models best fits your needs. The benefits of the KIC model means that it brings reassurance to stakeholders as the asset lock and the community purpose are regulated. As a part of the KIC test, the activities and benefits stated need to enable the KIC regulator to make an informed decision about whether your proposed company is eligible to become a community interest company. The Regulator of Community Interest Companies views the community interest statement as a key feature of the community interest companies, and therefore the opportunity should be taken to showcase your intended activities and champion the benefits you intend to deliver to your community. The regulator will verify that the asset log is registered as such as a part of the process as well. Transparency of the model is that the model provides a higher profile for social enterprises and not-for-profit companies, and a growing network and voice within the social enterprise and third sector. Further regulation is an annual CIC KIC report, which is placed on the public record for public scrutiny and transparency of operation of the company. This report describes the KIC's activities and the benefits provided to the community within the accounting year, the remuneration paid to its directors, the assets transferred other than for full considerations, any dividends paid to shareholders, performance-related interest paid, and the steps taken by the company to consult stakeholders and the outcome of that. As a community interest company, your governing document, the Articles of Association, must contain statutory clauses which cannot be removed or altered. The asset lock clause, which is one of these statutory provisions, ensures that the assets are used for the benefit of the community, and there are other mandatory clauses included to ensure members retain control. These clauses set it apart from other companies and prevent demutualization and windfall profits being paid to directors and members without the balances and checks of mutuality and chargeable status. Once a KIC is incorporated, it must continue to provide benefit to the community until it is dissolved or converted into a charity, charitable organisation, charitable incorporated organisation, community benefit society, or it is actually dissolved. You can't go from a limited company to a KIC. You can't go from a KIC, to a limited company. That isn't permitted. If it is wound up under the Insolvency Act or dissolution, then any residual assets, after satisfying the creditors of the company, the assets will be transferred to another asset lock body, such as a charity or another CIC. It doesn't get passed back to the members or shareholders. So the KIC provides limited liability for its members, and it can be tailored to a specific organizational structure, governance, or membership, and can be anything from a cooperative providing benefit to a wider community to a single member company. As a KIC limited by shares, it may expand by selling its shares. It also has the option to become a PLC. However, as the majority of KICs are small enterprises and limited by guarantee, we haven't received many applications for the PLC company type. Cooperatives are formed primarily to benefit their own members who will participate in the business of the society. However, as I've said previously, we do have cooperative KICs. This structure is chosen on the basis of its statutory asset lock, which I've said earlier, but directors can be paid, and they will wish to identify with the principle and values of the cooperative, but to say it's not for the benefit of the members, it's for the benefit of the community. Also, as I stated earlier, as a KIC must comply with company legislation. The company form are familiar and well understood by the business community. So what's the difference between a KIC and a charity? As a KIC, you have a greater flexibility in terms of your activities. You are able to add, alter your community interest statement as your company evolves and deliver a bigger variety of services. As a KIC, there are no trustees and no trustee control. the directors and members have control of the company. And directors can be paid not only remuneration for their role as a director, but as an employee of the company as well. The amount of the director's salary is shown in the annual report, so that is open and transparent to the public. The KIC model allows a light touch regulation. This means unless you have something that contravenes the KIC legislation, you are free to run your business without constant interference from the regulator. This is fewer reporting requirements and administration. A charitable company has to complete the charity's SORP, for example. What separates KICs from a charity or CIO is that they do not receive tax breaks from Her Majesty's Revenue and Customs by virtue of their legal status and cannot claim gift aid on any donations received. And that applies with corporation tax as well. There's no difference between the ordinary company and there is corporation tax is applied to a KIC, whereas it may not be applied to a charity. So what's the difference between an ordinary company and a KIC? The main difference is an asset lock. The statutory provisions within your governing document that prevent the members of the KIC removing the asset lock by special resolution. As an ordinary company, that clause could be removed at any time. Regulations are there to ensure that the KIC maintains its asset lock and provides benefit to the community it was set up to serve. There are more checks and balances provided by KIC legislation than with an ordinary company. One of these being the Community Benefit Report, which must be submitted by the KIC every year and is open to public scrutiny. This report allows the transparency of directors' remuneration and the use of assets to be shown. As a KIC, there is also a legal protection from demutualisation and windfall profits being paid to directors and members, as I stated earlier. Another difference between an ordinary company and a KIC is the KIC legislation itself, which provides that there are two kinds of activities which in an ordinary circumstances might be considered beneficial, but will prevent a company being eligible to be a KIC. And these are political campaigning and activities intended to support political campaigning. This is because the legislation is designed to ensure that the KIC regulator is not drawn into any political debate by having to reach any sort of view on the merits of a particular political aims or programs of that company. And then the other consideration then is activities which a reasonable person might consider to benefit only the members of a particular body or the employees of a particular employer. This is a crucial distinction between KICs and most ordinary companies.
Okay, thanks, Marilyn. Get your breath there. So we'll have another quick polling question. So, having just explained what a KIC is and the difference between a charity and a limited company, the question is, do you have a greater understanding of the KIC model than you did at the start? And again, the quick answer is a yes or no answer there. So I'll give that a minute while the answers come in there. Yep, they're coming in thick and fast. And I think, yep, we are, yep, quite a few have now voted. We're up to 70%, 80%. Okay, thank you very much for your votes there. I shall close that poll and share the answers with you. And as you can see, the majority of you now have a better understanding of the KIC model. So thank you for taking part in that poll. And I'll now hand you back to Marilyn to continue the presentation.
As I stated earlier, with the application process, before considering what model you want to take, You have to be mindful of the fact that once incorporated as a community interest company, there is little scope to change the constitution type of a KIC. So once you've considered your options and decided that the KIC model is for you, then the next step would be the application process. You should note that the application is looked at by both the KIC Regulator's office and Companies House. If the application is rejected by one or both teams, then notification is sent via Companies House of all the errors so that you can correct them and resubmit the application or conversion. You can now submit an application online, or should you wish to, there is still the availability to submit the application by post. You can access the online portal from either the Companies House website or via the link on the KIC Regulator's website. The link for posting an application can also be found there. So what is the information needed? As with an ordinary company, you need to provide details of the company, such as the name, the company type, this being limited by shares or guarantee, the registered office address, etc. You need a memorandum and articles of association. These are two separate documents. The articles of association are your governing document, your rules for running the company. The additional information you need for a KIC is the community interest statement. This is on form a CIC 36. If you are looking to do a conversion, this would be a CIC 37 form. If you apply to be a KIC online, then the details you type out via the online portal populates a digital version of the paper IN01 form, which is the company name, the registered office address, whether you're limited by guarantee or shares, etc. And then the memorandum of association. So via the online portal, you would need then to only upload two documents, and these would be the articles of association and the CIC 36 form, but these have to be in PDF format. Please ensure what device you're using, because we have found since the online portal has been operational that sometimes using the Pro Mac, the conversion of those documents sometimes alters the format or the numbering of the articles themselves. So just be aware of that if doing it via an online portal using a Mac. A conversion needs to be posted and requires some different forms. The process and the forms for this option can be found on our website. So things that you should be aware of when doing a KIC application. The CIC 36 form, which is the community interest statement, is a statement of activities and what you are trying to achieve. This form is placed on the public register and made available for the public to download. As I said earlier, the regulator views the community interest statement as a key feature of the community interest companies, and therefore take this opportunity to showcase your intended activities and champion the benefits you intend to deliver. Sometimes people just put in one word like training, and then, benefits the community, people get educated. That's not enough information. What type of training are you providing, and what will that training then bring benefit to the community? Is it into employment? Is it to dealing with healthcare? What is it to do with? So provide that information. I've made mention in the webinar about the asset lock quite a lot. Within the Articles of Association, there is a clause shown linked to that clause which asks you about an asset lock nomination. Now, these are registered bodies such as a charity, community interest company, charitable incorporated organisation, a permitted registered society, or a body established outside the United Kingdom that is equivalent to those persons. So if you're going for the community interest company application and you want to nominate an asset lock body, it needs to be a registered entity. It can't be your company as you're going to be a KIC. It's somebody you're paying it forward. So they are not ordinary limited companies, and they are not the director of the company either. So make sure nominating your asset lock body, it's neither of them, not you, not your company, or an ordinary limited company. The purpose is to nominate another organisation you would want to help with any residual assets the company had should your company dissolve. You are paying the kindness forward. So as I've said earlier, the Articles of Association are your governing document. Your kick can be limited by shares or guarantee. 75% of kicks are registered have opted for the limited by guarantee model. And anecdotal evidence would suggest that that is the preferred model of funding bodies. I'll repeat this again, the Articles of Association for KIC must contain statutory provisions from the Community Interest Company regulations that comply with the Companies Act 2006. We provide those model articles on our website which contain these provisions, and when you look at that document, these provisions are shown in red ink for ease of reference so that our customers can identify them easily. The statutory provisions cannot be altered and must be included word for word in that document. So for more information on the application process. For a more in-depth explanation of the application process, why don't you check out our previous webinars on our YouTube channel titled KIC Incorporations, the New Online Process. This provides information on the different screens you will see via the online portal and will give you some guidance on what to do. As information typed in via the online portal is a Companies House requirement, if you have any questions relating to this, please contact Companies House directly. Their email and telephone number are shown at the end of the webinar. And the other YouTube webinar we have is all you need to know about submitting a successful KIC application. This covers the type of information required by the regulator and the most common rejection reasons we deal with. So don't forget, all the forms and guidance for incorporating or converting a company to a KIC can be found on our website. If you have any queries, you can contact us by phone or email. We've included the Companies House details because, as we said at the start, that this is a two-part process. One application or conversion submission. Both the regulator and the registrar check the application before it can be approved.
Thank you, Marilyn. We're going to have one last polling question now before we end. So let me just launch that one for you. Okay, so there we are. Having just given you a brief outline of what a CIC is, the question is, how likely are you now to choose the KIC model for your company? And the two answers you got there are highly likely or you're still considering. So just get your votes in now, and I'll give it a minute while those come in. So thank you for those who are now taking part. I can see we've got coming up to 70% have voted straight away. Brilliant. Okay, so over 75% of you have now voted. So thank you very much for that. I'll now close that poll and share the results with you. And as you can see, a lot of you are still considering it. So, but a few of you are indeed thinking of answering that. So thank you. That's really the end of the presentation. We've got a minute or so left. So I've probably got time for a couple of questions. I'll quickly look through a couple that are there. So one, if Marilyn's still on the line, I've got a question here for you. Are CICs liable to pay tax and VAT?
Yeah, KICs are taxed in the same way as an ordinary company, and there is no general exemption from VAT for social enterprises that undertake trading activities, and this includes KICs. VAT is taxed on turnover and is based on the nature of the goods or services supplied. So enterprises operating without a profit motive are still liable to pay VAT. However, we found that those engaged in provision of education, health or welfare may find exemptions.
Right, okay, thank you for that one. I think we've got time for maybe one more. Can I name more than one asset locked body in my articles of association?
Yes, yeah, you may name as many as you wish. That's
Right,
not a problem. Yeah.
okay, that's a quick one. All right, just one more then. Let's have a look. Can you give business support?
No, we can't actually give business support to say we look at this wouldn't fall in the remit of the regulator, but there is a government support for those looking to set up a company and can be found in each country of the UK. For those in England, there is the Business Support Helpline. In Scotland is Find Business Support Scotland. Wales is Business Wales Helpline. And for Northern Ireland, Invest Northern Ireland. And details of these organisations can be found in our handout or on the website.
Brilliant. I think that's all the time we've got time for. We're running out of time. We're on just going 1 minute over now. So let me just hope that you found this webinar useful. And if there's another topic you would like us to cover, please let us know. Let us know at webinars@companieshouse.gov.uk. If you haven't already, please download the handouts provided. Or if you are indeed watching the recording, drop us a mail at webinars@companieshouse.gov.uk and we can get those out to you. I'd just like to finish by saying thank you for Marilyn for presenting today's presentation, and obviously the KIC team who are in the background answering those questions that you've had sent in today. Now, we haven't got round to answering your question. We will get back to you in the next day or so, answering those questions for you. So it just leaves me to say thank you very, very much for attending, and we'll see you on the next one, which will probably be in September now. So thank you very much for taking part. Goodbye.